Alright, we're going to conclude the last part of the chapter here with this part of the presentation, starting again with slide 68, which takes us into a new topic here on adjusting entries in an automated world using a worksheet like Excel. So what the next few slides are going to show is a columnar presentation in Excel of how we can manage the whole process from basically start to finish. So by using the Excel worksheet, the data can be organized across the columns in chronological sequence to facilitate financial statement presentation as shown here. So we're starting in the first two columns, the first section, if you will, preparing a trial balance on the worksheet, then entering the adjustment data in the second two columns, which is really the postings to the various accounts, debits and credits, that we would see to the general ledger. Then in the next two columns, we would have the adjusted trial balance, or the adjusted balances for the various accounts, that those that didn't have adjustments and those that did. Then those amounts would be transferred over to the following two columns, four columns actually, the income statement and the balance sheet, and the retained earnings portion of that would just kind of be folded in, recognizing that you'd have a beginning balance of retained earnings affected by net income and dividends to get the ending balance. So the worksheet can be set up to automatically download trial balance amounts from another source, that is, an automated general ledger system such as we might have in SAP or Oracle. Then the adjusting journal entries that are shown here that support the various postings to the various accounts that are adjusted can be pulled onto the worksheet for those various accounts as well from another source such as SAP. Am I on the right slide here? Yes. Slide 72. So the worksheet should automatically total the columns so that they can be checked for equality of debits and credits in each set of columns. Note that the abbreviation for debit is DR. Don't ask why, that's just the way it is. If anyone wishes to research the origination of this, have at it, and I might even give a couple of points extra credit for whoever finds a legitimate source or explanation for that. I've long since forgotten. Note that the worksheet contains an adjustments key for each adjustment made, letter-coded for ease of tracking. So you can see in that adjustment key, it runs them down. Supplies used, insurance expired is B, depreciation expense is C, service revenue earned is D, and so forth. So that way they can be tracked. And on slide 73, the worksheet should be set up to add or subtract as needed across rows as well, so that the adjusted trial balance columns reflect the correct adjusted balances for each account. On slide 74, then the adjusted trial balance columns are extended appropriately to income statement or balance sheet columns. Now, if you have a homework problem, say, that involves doing some or all of these steps, obviously you're going to want to try to use Excel to get that done, so it will do a lot of these calculations for you. On slide 75, revenue and expense accounts are extended to the income statement columns, and asset, liability, and equity account balances to the balance sheet columns as appropriate. And again, those of you that are whizzes with using Excel certainly know how to all the shortcuts in being able to make this happen. And finally, on slide 76, net income or loss is computed based on the difference between debits and credits in the income statement columns. So, if you follow that logic, We have a debit and a credit column. The debits on the income statement are going to be what? The expense accounts. The credits are going to be the revenue accounts. And so the difference between those two is going to be the net income or the net loss. When credits exceed debits, that means that the revenues exceed expenses and we have a net income situation. If it was the other way around and debits exceeded credits, this means that expenses exceeded revenues and we would have a net loss situation. So that concludes the presentations on Chapter 4. I'd appreciate some feedback if you want more coverage via some examples on whiteboard or whatever the case may be. But for now, we will wrap it up.